One thing I've noticed in life is that things really seem to just come and go all of the time. Whether that be relationships that you have with people, maybe the jobs that you currently work for, the opportunities that you might be able to take advantage of. I mean, I don't even live in the same state that I was born in. That being said, there has been one thing that has been by my side my entire life, and I feel like as I get older, it actually becomes a more and more important aspect of my life. And that's Google. So let's go ahead and talk about Google. Hey everyone, thanks for joining me today. My name's Matt, and before we get started here, I just need to say, not advice, don't take this as advice. If you need advice, speak to a financial advisor, but this is just for your entertainment purposes only, so do not make any investment decisions based solely on what I have to say here. Now, as I mentioned in the intro, the company we're going to be taking a look at today is Google. Now, Google actually seems like almost the exact opposite of the type of companies that I traditionally invest in. They are a well-known company, they are the furthest thing from being a boring company, and for a tech company, they actually have a valuation that I can actually get behind. So today, I wanted to talk about why I like Google, what impressed me from their earnings call, and then we'll just quickly review some numbers to see if this is something that will add to the Watchlist Wednesday portfolio. Now, if that sounds okay with you, I just ask that you consider hitting the like button, and if you haven't already, I'll just put it out there now. Go ahead and subscribe if you haven't already. It's free, just takes a second of your time, so just consider doing so. So let's start off with, why do I like Google? Well, to start, it's been the search engine that I've used basically my entire life. I actually don't really remember there being a time where Google wasn't in my life, which is crazy to think about. And they very much outlasted some of their competitors, which, if you remember, might be companies like the horrible Ask Jeeves or even Yahoo, really. I think today all we really use Yahoo for is Yahoo Finance, or at least I know personally that's all I use it for. I am also a huge fan of YouTube. And I don't just say that because I have a YouTube channel. I actually enjoy watching YouTube all the time. It is my main source for where I go to when I want to watch entertainment because ultimately I can decide if I want to learn something and maybe watch like a finance or a real estate video, or if I just want to watch something that's on the more entertaining side, like a PewDiePie video or something. I have such a wide array of options to watch, and I can even throw cooking in there. I watch a lot of barbecue videos on YouTube as well, which is part of the reason why I really enjoy this platform. But one thing that's become more and more important to me is that Google has so many different resources that we can utilize for free. As many of you know, I am in the process of starting a business, and we use Google for so many different aspects of that, whether it be using Google Docs or Sheets to kind of share notes, scripts, contacts, all of that fun stuff. We even use the Google Meet now for our video service because it's free and ultimately does the same thing as Zoom. We use Gmail for our communications, and there's just so many other services. We use, the Google domains as we purchase the domains through. And now I'm officially monetized by YouTube. So again, this is a business that really seems to be growing with me as I get older and just becomes a more and more important part of my life. And lastly, I am a Google Chrome user as well. So basically, I use Google probably more than any other product or service I would say out there. And I'll be honest, I didn't actually even realize how much I utilize Google until I started doing my research for this video and realized that I am on Google many hours a day using at least one, if not multiple, of their services. But now I wanted to just quickly go over their earnings report because it was a very impressive one. Now, actually, I really don't want to take too deep of a dive into this earnings report because, well, if you saw the news around it, it was really promising, and there's just so much that we really could cover in that earnings report. But there was just one thing that stood out to me that I really wanted to hit on, and that is YouTube. Now, I want to take you back to around 2006. This is when YouTube was only around for about a year, and news came out that Google was offering to buy YouTube for about $1.6 billion in stock. A handful of people thought that this was not necessarily the best purchase on Google's end, one of them being Mark Cuban. Mark Cuban actually went as far as to say that only a moron would purchase a company like YouTube. Now, maybe that's because he saw some similarities between YouTube and his broadcasting service that he sold to Yahoo, but he was pretty critical of this purchase taking place. And from what it sounds like, he definitely thought this was a purchase that would fail. Well, that $1.6 billion purchase back about 15 years ago made $7 billion in revenue just last quarter. So again, they purchased it for $1.6 billion and they made $7 billion in just YouTube's revenue alone over 3 months. Basically, YouTube alone almost made as much revenue as what Netflix does, which is crazy because YouTube is obviously just a portion of Google's business. So I hope that helps paint the picture for really just how big this company is and how powerful they are. Now, with that being said, as I was looking through their earnings, I was surprised, and admittedly I shouldn't have been surprised, but I was, to see that such a large portion of their revenue does come from advertising. Actually, the majority of it comes from advertising, which at the end of the day does make sense. And it reminds me of back about a year ago, again, when I was talking about Palantir, how a lot of people were saying that data is the new oil. And I think that YouTube's and Google's ad revenue actually goes to support that, because they're able to tailor or target ads towards specific people based on what they're searching. And of course, Google does make money in other ways aside from just advertising. They sell products like there's the Chromecast, even the Nest, those like home really cool weather dial things that people use to change temperatures. That's now a Google product. There's the Google Home, the Alexa competitors, which admittedly I have both an Alexa and a Google Home thing, and I don't know which one I don't like more, because neither of them are great, but they both do the job for the most part. And I don't know, maybe leave a comment below. What do you prefer if you have both or experience both? Do you prefer the Google Home or the Alexa? Maybe I'll post that as a poll and we can take a poll on that and see what the results are. Anyway, they also make money through the Google Play Store and have many other ways that they're able to generate revenue. But it just goes to show how many active users they have using Google and are able to generate a significant amount of cash flow through their advertising. But now, let's go ahead and just take a look at some of these numbers here and see if this company shows any kinds of signs of valuation. Probably already hinted at it earlier in this video, but it does look promising so far with this company's numbers. As we can tell, they are a gigantic company with a market cap of $1.81 trillion. Now, I know I've talked about a few companies hitting that $1 trillion mark, including Apple and Microsoft. But just to put this in perspective, Google has a market cap that is still almost $1 trillion higher than Facebook. And that's crazy to think about. Last I saw, Facebook's market cap was around $992 billion, and here's Google sitting at $1.81 trillion. So that should hopefully put it in perspective for just how big this company is. They have the PE ratio of 29.43. It's below 30, and for a tech company, I actually think that's a pretty justifiable price to earnings ratio. I know some people out there might think that's a little high at this opportunity, but personally, I would be okay paying just shy of 30 times earnings for a company like Google, again, that can generate $7 billion in revenue from one service in 3 months. Now, for a company that came out in 1998 with a very simple premise, search, it is very impressive to see that they still have revenue growth of over 32%. Now, again, that's not the most stellar numbers compared to some of the other companies we've seen, but we have to remember that, again, this company is a lot older than a lot of those tech companies we've looked at with a really high revenue growth, and at the core, they're a search engine business. So I think they've done a really good job of separating themselves just from that basic search opportunity, and have been able to still continue to find creative ways of growing that revenue. And to further add to that, we have a great Ebitda growth here of 64.12%, which is something else that I find very encouraging, again, for a company at this size and for how old it is. I don't mean to make it sound like they're a really old company. I mean, they're 23 years old. But compared to some of these other tech companies, they've definitely been around a lot longer. And lastly, we have a quick ratio here of 3.15, which is something I absolutely love to see. Now, I am surprised that they have so much cash on their balance sheet and don't issue any kind of dividend. I'd be curious to know, what are they planning on doing with having so much cash? Or is it that they just generate so much cash they don't know what to do with it? So I do anticipate, and I saw Everything Money say this, so I actually do agree with them on that as well, where I think Google will probably end up paying a dividend someday. If not, they'll probably reinvest that money into some other crazy purchase that they could just pay cash for. And if those numbers weren't good enough for you, I just also wanted to show you Simply Wall Street's discounted cash flow analysis, where we actually can see that they have Google being around 32% undervalued, giving them a price per share of about $4,055, which is crazy to think about. Now, personally, when stocks start getting into this price, I'm just not as big of a fan of purchasing them, just because I'd rather diversify and, maybe take a larger portion of ownership into other companies. But that being said, there is still an opportunity here for this company to grow and have some positive momentum inside of our portfolio. So I'm sure it comes as no surprise, I did already add Google to the Watchlist Wednesday portfolio. I forget when I did it, because I think I did it like Thursday of last week or something. Last week was a pretty crazy week for me, so I'm a little kind of messed up on my timing here. But anyway, let me go ahead and get the portfolio pulled up so we can take a look at how that's performing. All right, so I did only end up buying about 3 shares of Google. Again, it's a company I really wish I could add more to, but trying to stay true to that $5,000 of an initial investment with a lot of these. Well, trading at around $2,700 a share was not easy for me to do. But I didn't want to just walk away with 1 or 2 shares, so I settled with 3. So as we can see, and market hasn't opened yet, so this will probably change pretty soon. It's 9:15 in the morning currently, so about 15 minutes before market opens here. I bought 3 shares of Google and at an average price of $2,764.42, and it last clocked in at $2,720, so losing us about $44 a share, which comes out to about $132 loss. Again, I'm not really that concerned with this company because I really do think that this is just going to be something beneficial to add to the portfolio. As many of you know, I am more of a growth investor than an income producing investor. That being said, I think when buying a company like Google that doesn't pay a dividend and it does have such a high stock price, it might be one of those times where you are better off just maybe waiting for a better buying opportunity. I did this kind of impulsively, but nonetheless, I still think this is going to be a great addition to our portfolio, and I'll be excited to see how this one performs. As always, just to take a quick look here though at some of the other ones, Blackstone's had almost a $3,000 gain for us, which is crazy to see. That company's been doing very well, and I honestly do kind of want to look further into it to see what have they been doing that has just done so well for them, probably something with real estate. Shopify is also up almost $1,500 for us. That's just why I love that company. And the rest, kind of boring. We don't really need to go into it, but the good news is that we have still almost a $3,500 gain in this portfolio, which I am happy to see. So those are my thoughts on Google. I'd love to hear what all of you have to say. Please leave a comment below if this is a company that you like, or if you already own shares of it, or if you think maybe there is a company out there that does search better than Google does. Love to have that discussion with all of you, so again, please leave that in the comment section down below. If you enjoyed this video, remember again, I just ask that you consider liking it, and if you haven't subscribed already, as always, it's still free. I checked this morning and I didn't see any costs there, so go ahead and hit the subscribe button while you're at it if you don't mind. With all that said though, I'm going to wrap up here, so thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world, but you're right here with me, and I really do appreciate that. But I'll let you go ahead, enjoy the rest of your day, and I will see you next time.